Okay, folks, welcome back. This is our quarterly review, week ending March 8th, 2019. And in this presentation, we're going to be looking at, obviously, the general review on the dollar index, euro dollar, GBP. We're incorporating the seasonals now because it's a quarterly analysis. And we're going to be bringing in the COT analysis, and we'll be making mention of the liquidity profiles, respectively. Okay, so our economic calendar. This week we have core retail sales for 8:30 a.m. New York session. And there's a high impact speech planned for 8 p.m. by Fed Chair Powell. Medium impact GBP for 9 a.m. Monday, New York Open. Tuesday, we have a 5:30 a.m. GBP GDP and manufacturing production, high impact. And then at 8:30, New York Open, CPI, core CPI for the dollar. And we have a member speaking from FOMC at 9:45, medium impact. And then we have the Parliament Brexit vote, tentative. And then Wednesday, we have annual budget release for GBP. Then on 8:30 a.m., New York Open, we have core durable goods, orders, and PPI. And Thursday, there's an absence of anything for dollar, GBP, or euro. Then on Friday, 10 a.m., we have preliminary consumer sentiment for the dollar index, medium impact. The big heavy hitter, obviously, this week is going to be Tuesday. Tuesday has that tentative Parliament Brexit vote, and I'll mention something pertaining to cable as it relates to that when we talk about it on the technical side of things. There's a lot of news for GBP on Tuesday, so we'll be very careful with that pair going into this new week. Monday, depending upon how we open tomorrow, the Sunday's opening, how we are in terms of Friday's trading. In other words, do we gap down? Do we gap up? It's going to be important to study that. I want to believe that we're going to see it rush ahead of the Parliament Brexit vote. Normally, you would expect something like a lackluster consolidation because they're waiting on the vote. I think there's a lot of momentum in GBP right now, and there's some unrealized upside for dollar. So there still may be some. I wouldn't be surprised to see a gap down opening on GBP. That's what I'm saying. So we'll see. If it doesn't gap down, then probably see on Monday some consolidation ahead of that vote. All right, so we're looking at the dollar index. This is a seasonal chart, and I'm going to talk about a little bit of the details in here so that way we know specifically what we're looking for and what we're looking at. So this yellow box up here represents the contract delivery month. So currencies trade in contracts of March delivery, June delivery, September delivery, and December. So as a commodity trader, those are your delivery months or contracts that are traded. Unlike the Forex or stocks or crypto, they, as futures contracts, have expiration dates. That's what's delineating here on the chart, this green dashed line. This is when the March contract expires, and we roll over to June's contract month as the nearby. Right now, the nearby contract for the dollar index is March. Now, obviously, being March 9th, 2019, time of this recording, we have very little time to get to this. It's basically next week. So, looking at it, we see that the dollar index still could potentially make a run higher. Now, this is important, folks. Okay, when we see this on a seasonal basis, where we have just a little bit of time left before the seasonal tendency kicks in, that would imply, it does not mean it's going to happen. Okay, very important. So in your notes, especially for the new folks, you do not take the basis of a seasonal tendency, which is what I'm going to be outlining here, and say, okay, well, this is obviously going to see a crash in the dollar. That's not what I'm saying, okay? But I'm going to blend some things to kind of give you my internalization, if you will, or expectation of what may transpire. The dollar index failed to get to that weekly inefficiency we've been watching for a couple months now. And we get to the chart, you'll see what I mean. But just remember that we have a little bit of time before this seasonal tendency kicks in. And it should be around next week. Now, can it delay and go into the following week? Yes, absolutely. Can it fail and never go up a little bit more and go straight down from where we've made the high from last week? Absolutely. So that's the thing that is a little bit of an art. You have to have a little bit of finesse with it. Not so much that, well, it's too hard to use, Michael. No, we're focusing on the technical sides of the market. And we're going to be looking for signatures to justify what I'm outlining here. Now, I may not get it right. Dollar may continuously go higher all the way through until May. That may be wrong in terms of expecting the seasonal tendency to be seeing weakness on the dollar's part. But we have to be mindful of the conditions that are usually seen. This red line here and this blue line here are contrasts between a 15 and a 40-year compilation of seasonal tendencies. Okay, so in other words, what we're doing is we're taking the data and compressing it in such a way, and I'm not doing this. This is from mrci.com. Steve Moore produces the best, absolutely the best work on seasonal tendencies, and the data that he compiles to get this is unique to him. So if you like what you're seeing here and you want to see it with other currencies and in its entirety, because there's more data than here, I'm just focusing on right now. It's just a wonderful service. I don't have any kickbacks. He doesn't even know anything about me sending people there. Okay, but I think it's worthwhile for you to subscribe to his service. And if you're going to ask me, what should you subscribe to? Steve Moore's seasonal tendencies are absolutely the best. They're the pinnacle of this branch of analysis. There's simply nothing better than what he does. Okay, so again, I don't get anything for it. He doesn't know I send people there. So just go ahead and if you're liking what you see here in terms of the seasonal tendency charts, again, there's a lot more to it than just what I'm showing you here, but it's worthwhile to subscribe to the guy. He really does an amazing job, and it's worth it just to check it out. It's mrci.com. Okay, that's where you find him. So we have the likelihood of the dollar index rolling over and finding a bearish stance, seasonally speaking. Now, it doesn't mean that the technicals are going to say, okay, well, it's going to go right up here and make a top and then go down. But now watch what happens. Let's say that this week we get some kind of a knee-jerk reaction with the Brexit, okay? And we see dollar shoot up and trade into that weekly inefficiency that we've been looking for. And you're probably saying, well, what is that weekly inefficiency? That's why I make videos. Go back and look at the couple weeks prior to this one, and you'll see exactly what I'm talking about for the inefficiency. And your chart should already have it. The new folks, you're just going to have to go back and look at the old charts and old videos. Just a couple weeks back before this one, it's all you have to look at. You'll see what I'm talking about. So, what happens if we shoot up in there from a relative chart basis for the dollar index? Because that's what this is indicating here. These lines are showing the trend of the seasonal tendency of the dollar index over a 40 and 15-year compilation. So in other words, the last 15 years they compiled the data and shown what the seasonal tendency generally did, or what price did this time to this time. And it took 40 years of data and compressed it and compiled it and showed it still pretty much does the same thing. what I like to see in these charts is when both the red and the blue, okay, and these are not indicators. All this is plotting a seasonal tendency. It doesn't change. It's static. It's always like this every single year. That's how I interpret it. That's how I look at it. And it's like a roadmap of what should take place. Okay, so when we have this condition like we have here, where the dollar is right now crouching right about here from a daily and weekly perspective, and up here would be that weekly inefficiency. So what happens if we shoot up there, closing that weekly inefficiency? Easy for me to say. If we close in that inefficiency or we trade into it, that's enough. Okay, it can act as a heavy level of resistance. Okay, and buy side liquidity would be tapped into, and then we could potentially see a rollover in the dollar after that, and that would allow foreign currencies to rally going into May. So we have the likelihood of swing trade ideas unfolding for longer term to intermediate term for foreign currency and weakness on the dollar. Now, I'm not trying to call a top. I'm just suggesting that this could be a scenario that unfolds, and we have to subscribe to the likelihood of it coming to fruition. So do we get wildly bullish dollar and heavily bearish foreign currencies when it's like this? I don't personally. Now, if I see indications that we most likely aren't going to see this seasonal tendency come into fruition for the dollar, then I'll abandon it and just focus primarily on what I'm seeing in the technicals. But I look for these because every quarter there's generally some kind of a market structure shift, okay, or what we call here a quarterly shift, where we can see a time horizon of about a month and a half to 3 months. Now, I personally like to say 6 weeks is my horizon where I trust it, but sometimes I get it right, but other times, I don't have that much visibility as far as 3 months ahead, at least in terms of precision. I like to keep it around 6 weeks or less, and using these approaches to quarterly analysis, it helps me do that very thing. And you've seen examples of it over the years, so it doesn't make a difference. But moving on, let's go over to the dollar index daily chart. You saw last week we had this, obviously we've been mentioning it for a couple months now, this buy side liquidity pool in the form of equal highs, relative equal highs, and then above that is that weekly inefficiency. We just got into the old high here, and we're hanging around. We have the old high here we came back and retraded to. I'd like to see it just use one single down close candle on Friday and just make a run straight into it. That's what I'd like to see this week. It may not do it. It may not happen at all. Okay, but if we break below this low, I'm watching this high right here because we have a little bit of a void. So we could trade all the way back down into here and also beyond the scope of the bodies of these candles and just fill in this inefficiency. I don't require that. If it went down just halfway, that would be sufficient for me. And I'd expect some measure of buying to come in on the dollar and then see that weekly inefficiency tapped into. But this is what we saw last week. Beautiful delivery of our analysis. The price delivery for a dollar was exactly to script. The only thing we didn't get was the run above this high. So I'll be looking for that. If we do it right from Sunday's opening going into Monday and we hit this high here, that might be problematic for the bulls because in that case, it would look like they're rushing to get up there, hit those stops, and then fade that old high. And then we could probably see on the heels of a Brexit event on Tuesday, some measure of sell-off on the dollar. Now, right in here, there's a small little gap. Now, you're probably not looking at that as a gap because we had a wick here and then opened here, traded down a little bit and went up here. That, to me, is important. Right in here, if this is important. It's also overlapping with 1, 2, 3 down closed candles comprised into one candle. That would be a order block. So we have an overlap of this little gap and these down closed candles, order block, overlap. So we could see dollar come all the way back down here on some wild knee-jerk reaction relative to Brexit. And then if we do sell off in any capacity, whether we go up first to the weekly and then sell off, or if we go straight down from the opening on Sunday, I'm still going to be watching this level here to offer some measure of support. Now, here's the thing. If we lose this little area here and it goes trading lower than that, I do not see the order block here as a buy and go up. I don't see that. I think if we break below here, we're going to be looking to do some damage below these lows. Will it happen? In my opinion, I don't think it will. But if we do, this right here is that line in the sand for me that we're probably in trouble for the near term for the dollar going higher. And we'll be looking to seek the liquidity below lows on the daily. And that would be in the form of a run below this low here. Moving on over to the hourly chart for the dollar. This is what we saw last week. Here's Monday's low and range high for Monday here. We had a little bit of a run up and then found support on Monday's high. Consolidated on Tuesday at the close. And on Wednesday we had a consolidation day. But notice what happens. Wednesday we trade back down into Monday's high. But then, as I mentioned before, previous day's highs and lows. If we're bullish, as we have been for the dollar index, if we're bullish, previous day's highs and very important, Monday's high all the way through to Wednesday. Okay, so once Wednesday closes, the likelihood of it using Monday's high and low as a support structure starts to recede exponentially. In other words, you usually get Tuesday and Wednesday sensitivity to Monday's high or low. They're the best days to do it, but sometimes you'll get a Thursday or a Friday reaction, depending upon what the structure is showing for that particular market or pair. But here, we whip down below Monday's high. Okay, so here's the mid-range of Tuesday, because we have Tuesday's high, Tuesday's low. So basically, Tuesday's equilibrium, Monday's old high, and we have a little bit of equal lows in here. Price trades right through that into these last two down close candles, right before this little spike up. This is our bullish order block, and it's on a Wednesday. You trade into that, and when we get down to a 15-minute time frame, you'll see a little bit more detail, but you can see clearly here, this is a buy. Then we rally away, come back down into an order block that's here. Why is this an order block? Because it's around previous day's highs and lows, and we have a reaction away from it. Trades back down into it, order block, mean threshold, buy, explode to the upside. Almost, I was watching this, and I was so excited watching it, thinking it was going to stab right into that weekly gap, because I was going to go on Twitter and parade around like a peacock, but it didn't give it to me. So we've had some retracements in here. We come back down to this old high here. Had a little bit of a bounce. I'd like to see it trade at an opening higher on Sunday, come down, fill the gap, be a catapult pattern, and then send it up into the weekly inefficiency. That's what I'd like to see. I'm hoping I see it, because that would give me confidence to trade on the basis of selling short on cable. When we get to it, you'll see what I mean. Moving on into our 15-minute time frame for the dollar index. Here's Monday's high and low, the range. And on Tuesday, again, much like we saw on the hourly chart, we have an equilibrium price point that lines up with Monday's high. Relative equal lows. I mentioned this on the Wednesday review last week. We blew the stops out here already by doing that. And we had relative equal highs. Too clean. Look at your chart. Look at the video from last Wednesday. And we see the extrapolated move to the upside that blew through the clean highs and the old high, which is being delineated here. Trades down to that, finds a little bit of support. A lot of trend line lovers in here, looking for a continuation lower to try to catch and pick tops. You really want to avoid that, even though I've given you the criteria that may lead to a intermediate term or short term high in the dollar relative to its seasonal tendency. We don't, again, go into it with it's a panacea. It's gonna work because it works all the time. It doesn't do that. It just means that there's a high probability that it might. Now, I like to use seasonal tendencies when it's calling for a bearish slide in a particular market. When there's an existing downtrend, that's like shooting fish in a barrel. It's so easy to work within that. But we're looking at a primarily bullish market, the dollar index. So it's a little bit tricky. So I'm allowing for a long-term to immediate term reversal on the dollar on the basis of hitting that weekly inefficiency if we spike up in there ahead of or during the Brexit vote on Tuesday. So again, just make sure that you know that that could potentially be there. If we could, consistently just rip on through it and go higher, then obviously we have to dismiss the seasonal tendency until a later time. Doesn't mean it won't turn later on, a week or two from now, and then drift into May lower for the dollar. It just means we have to blend a few things. Okay, so it's not like, well, the checklist says this, 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 and therefore the market's supposed to do that in the very sequence. No. This is what analysis requires. You have to do some thinking, okay, and weighing out the probabilities of certain things. So in here on Tuesday, I want to take a look at this little run up in here. We had a price run here. So this is a low resistance liquidity run. Why is it a low resistance liquidity run? We have bullish order block. We trade down into it here ahead of equal highs. This is a bread and butter setup. This could have been your setup for the week. You're done. Not that you trade the dollar, but you would use this to go short foreign currencies. So we could be a buyer here, running up, take out the highs, take our profits, using this low as our stop loss anchor, allowing for a price to come back down. Look at this little bit of a gap in here from the body of the candle down to the order block. That's sufficient enough too. Price trades down into the order block, the bodies, the open, hits it, come off, consolidate above Monday's high. Trade back down one more time, slightly. This is your Judas or market protraction on March 7th, and then they accelerated to upside with the dollar index. Beautiful, beautiful run seen here as outlined in previous week's analysis. Moving on over to euro dollar. You can see here it's pretty much the opposite of what we showed on the dollar index seasonal tendency. We have the euro basically from where we are right now. We're right in here. So it doesn't look like it's going to do a whole lot between the March contract expiration. That's what, again, this is that dash line here. Now, it's not a lot of importance to that. I'm just stating that for you that are in here and have gone to charter members that are studying the futures market or commodities, that's how we're using the information here. This relates to just simply the contract delivery month of March. We're so close to expiration. My opinion, you should be watching the June contract at this point for all foreign currency futures. That means the Eurodollar futures and the British pound futures contract. If you're not trading or watching the futures contracts, then you don't need to worry about this up here. Just focus on the dates in the calendar relative to this right here. Okay, so this one here, not this down here. Okay, this top one. So it's January to February, February to March, March to April, April to May. And don't worry about these. And I probably should have cut it off when I made the slide, but I'm just showing you. Maybe it's probably a good thing that I did keep, so that way we can teach the distinction. We don't worry about this down here. Okay, we're only worried about the actual calendar dates here, because this is the static dates and calendar times that we look for the seasonal influences. Okay, so we're expecting some measure of upside on the euro dollar. Okay, so the euro dollar looks like it wants to, on a seasonal basis, wants to rally in here going into May. So, seasonally speaking, we have an expectation to see weakness in the dollar. Seasonally speaking, we have a seasonal tendency to expect bullishness on the euro dollar. Again, by itself, it's not enough. It's not a panacea. It just might happen. We'll be looking for signatures and price action to support the idea. So, from a quarterly standpoint, again, I like to say about 6 weeks time horizon. Again, we're right here. So that takes us to, well, about May. And that's what I have the chart set up for, to give you the time horizon that I'm comfortable with. So these are trading days, not weekends. This is looking ahead. That's what we're focusing on. All right, so here's COT data for the euro dollar. Now, for the euro dollar futures, what I do is I take the data, and you're looking at it down here, okay, and I teach you how to create this on your own. Or if you have a really good study of looking at ranges visually, you can just split the range in half and then determine where that would have been in terms of buying and selling. Okay, so this is my hedging program or application to using the COT data only on the commercials. I don't look at the small specs, I don't look at the large specs. This is only the fluctuation of the net position of the commercials. Notice there's an absence of any kind of net zero line over here like you normally would see with a net trader's position chart. I create the boundaries with the high and the low relative to where it has traded, and I look at basically the range, and then I create the split of that range in here, and I basically block out anything above above the middle line as buying, and anything below it as selling. And you can see there has been a huge amount of accumulation on euro dollar. Okay, so to me, it's been winding up for something. Now it may crash, okay, and this still will be very, very early. Commercials have very, very deep pockets. They can be hedging against all of the down move, and as it drops more, they'll be buying more of it because they'll unload it later on, not to make, loads of money in respect to their buying, but to provide liquidity. Okay, so think about it. Large funds are doing what right now? They're selling short the euro dollar. Okay, so fundamentally speaking, euro dollar's weak. Trend basis, we've been expecting it to go lower as well. So if large funds with deep pockets have a lot of money at work, if they're wanting to sell short, where are they going to get the liquidity at to do that? That's what that green line is. They're buying all the short positions or playing counterparty to those large funds that are going short. So that's why we see this big buildup of that green level here where it's above the midline. All of this is buying. Now, if you look at a standard commitment of traders report, and I'll leave this for your own personal study, it only is until like right in here, it went to above the zero line from a traditional stance of looking at commitment of traders. But if we look at it the way I teach it to you, and again, if you haven't gotten to that month yet, trust me, show it to you, but I'm just giving it to you because we have to do quarterly analysis every 3 months, and this is what we require. We need data to do it. We didn't see anything because of the government shutdown in the U.S. for a couple weeks, but now everything should be smoothing out going forward unless we have something else happen from Trump's administration shutting things down. It doesn't look like we'll probably see that again, but if it happens, then anytime our government shuts down, the CFTC, Commodity Futures Trading Commission, which is the watchdog for commodities and Forex in the U.S., they put the brakes on delivering the data because they're government ran function. And you can make whatever you want to make of that. So the long-term scenario here is that all we're seeing is the visual representation of them offering counterparty to large funds selling short. If you look at the historical perspective of large funds relative to commercials at major highs and lows or turning points, tops and bottoms, on a weekly chart stance, you'll see that the large traders are always wrong at the end of the trend. They have their biggest position long at tops, and they have their biggest position short at bottoms. So when we have periods where we have a prolonged accumulation, like we see here, where all of this data, okay, we consolidate, and every time we dropped, okay, we've increased even more. And it's this selling to the market as the large funds traders are doing, and their selling has to have a counterparty, and that's the commercial, okay, the large banks and institutions, their counterparty to the large funds. So that's what we're seeing here. All of this is the massive accumulation on the commercial aspect of looking at COT data. All right, so the daily chart for Euro. We have been in a long-term consolidation, but with a bearish stance lower. We were looking for specific scenarios to unfold. We do have a weekly inefficiency that, again, I'm going to counsel you to go back and look at the previous week's analysis, not subscribing to this just one video. Again, you should already have it on your charts anyway, so when I say these things, I'm not expecting to get tweets or questions in the email or post to the forum, what is that weekly inefficiency you were talking about, Michael, on euro and on the dollar index? I'm not going to answer that because it's mentioned ad nauseum. Okay, so it's important when I say certain things and I make annotations to my charts. If they're on my charts, you need to have them on your charts too. That way, when I make mention of them, I may not have them on a chart when I'm talking about it, like today, but you know what I'm referring to. So I'm not going to spoon feed everything to you. I'm expecting you to have a great deal of interest in what you're studying, so therefore, note-taking is required. We had a nice sell-off last Thursday, ran below this old low here, and we created a sell-side imbalance, buy-side inefficiency. That's what this is, SIBI. Sell-side imbalance, buy-side inefficiency. That means we created a void or a gap, okay? In here, price, I'm expecting, if we get some kind of an upside, I want to see the sensitivity of this low on this candle here. We go right up in there and fill that in, or half of it, and that would be enough. Then I would expect to see some of a rollover. I would like to see it leave this open. I don't want to see this closed personally. If you were asking me what I'd like to see it stay open, and if it trades up to this point, it needs to remain below this candle's open. Okay, that's why this is delineated here. That's a bearish order block. After sell side imbalance, buy side inefficiency, if price trades up into there, I want to see price remain below that. Okay, and then we'll see price hopefully, if we're going to see that weekly inefficiency traded to on a dollar above us, this scenario would have to be in play. Moving on over to our hourly chart. Here's Monday's range, high and low. And Tuesday, we had a little bit of consolidation and it tore off to the break below Monday's low. Consolidated around it, acted as a support and resistance idea here. Consolidated into Tuesday's rollover to Wednesday. Price trades a spike lower, clearing the equal lows here. Then runs up. And this is what we're looking for. We're looking for opportunities to sell into institutional order flow. Periods of rallying, okay, fading that. That's what we're looking for. We have an imbalance here. All of this rushed down. So we have another SIBI, SIBI. Sell side imbalance, buy side inefficiency. In other words, we have a down move here. So we're going to be looking for the future move going up into that to close that and rebalance it. That's what rebalancing is. Price comes back up, rebalances it with bullish movement up after it creates that tag of that bearish order block. Price sells off, consolidates, goes into the next day. Again, we're looking to sell short. Do we chase it lower here? No. Price runs up, creates a Judas swing, and then sells off and falls off precipitously. That old low delineated here with that horizontal line. You see price hits it, pauses, and then runs deep below it, attacking the liquidity that would be below that old daily low. Price comes back up and leaves the sell side imbalance, buy side inefficiency relative to the daily chart. This is an hourly chart, so you can see there's further refinement in here where you can see specific levels of inefficiency. I'd like to see it remain below this low, obviously. I'd like to see it remain below this low. I'd like to see it personally trade just up to this low here and then roll over and then find that solid run to the weekly inefficiency on the dollar index. That's my choice opportunity. If I can watch the market and see those and come to fruition, I'll act on that. Euro dollar 15-minute time frame. We can see Monday's range, high and low. And on Tuesday, we had a consolidation. Price runs below, as I mentioned when we were looking at the hourly chart. Here's that spike below the equal lows. And we see that and price runs back up. It's important if we're bearish on a market like we were on euro dollar and we were strongly bullish on dollar index last week. When we see this run below equal lows and then snaps away, the only thing that should enter your mind is, okay, what area of bearish order block or buy stops is residing in price? That's what they're going to attack. Well, once this run here occurred and we started to move higher, your eye should go right to this over here because it's all sell side imbalance. It's all selling. So they're going to want to rebalance that. So IPTA will roll right back up, close that in. What's it doing? It's missing selling opportunities in here. There's no offers here because it gapped down. So what does it need to do? It needs to go back up in there. Notice it only goes up there once, right? No, it doesn't, because it has to be offered in here to be efficient. So we have 1, 2, 3 times. So for 45 minutes, it worked that little gap right in here off of bearish order block, and then we start to see it recede away. Consolidates around Monday's low, creates another area where buy stops are residing. Market protraction, bearish order block, beautiful delivery right to the pip on the body's high, and extremely weak sell-off for the euro dollar going into Thursday's New York session, attacking that old daily low. We had an inefficiency here. Price creeps up into that, fills it in. That to me, okay, and the fact that we did all this slow grinding up, this is all IPTA just doing a rebalance up to almost the 50% of Thursday's range. Trading up into this high here. Now it does go a little bit more. I don't have it on the chart, but I couldn't create the chart to show Monday's data here on a 15-minute chart. Still have the ability, without zooming, to see the distinctions between bullish and bearish candles. The high it trades to on Friday was this right here, and that's what that inefficiency or sell side imbalance, buy side inefficiency range that's being shown here. That's what's missing. Okay, so if we see any upside, okay, if we see any upside, look right in here. That small little gap right there, that would be enough for me as well. Interestingly enough, also, that if you look at the high here down to the low, that's an optimal trade entry right there. So you're going to be watching this level here, just above that 127 level, 112.70. So 112.70, basically 112.80 institutional. And that would be a level that I would like to see be defended, if you will, for the euro dollar, and then look for some shorts to materialize there. Now, if we plow right on through that, then I have to concede with that weaker dollar may not that weaker dollar may be coming into fruition, and they're going to be attacking the buy side liquidity resting above these relative equal highs from Wednesday's high and Thursday's high for the euro dollar. Remember, this thing's under a lot of accumulation, and it has a wonderful seasonal tendency in concert with it, plus the likelihood of that dollar index. It doesn't have to trade up to that weekly inefficiency. It's just a target. And we did an extremely nice run last week. So while the dollar index took out a rejection block on its daily chart, when it rallied up, it didn't get above the old high. And it doesn't have to. That's why we teach partials. That's why we teach management of the trade, where we pay ourselves relative to what we see in the chart. Here, we can see that there are signatures that we are still lending our attention to, but if it doesn't come to fruition, or it screams in the opposite direction, we have to submit to that and just concede that, okay, the seasonal tendency may be starting a little bit earlier. Or if it just tears higher on the dollar index and just really rips into it, and say the Brexit vote causes or becomes a catalyst for a steeper decline and sell-off for GBP, that may be a kind of like a Six Sister environment where we see some explosion on the downside with the euro dollar too. So there's a lot of things to weigh out this week, and I'll talk more about it as we go along. I'll hint at certain things on Twitter, kind of like a real-time thing as much as I can get it for you. But this is the things I'm focusing on, the areas and specific levels I'm looking at. The likelihood of the quarterly shift seeing the weaker dollar and bullishness on euro dollar and cable is what we're focusing on. That's what I'm kind of getting you prepared for. We can still sell off a little bit more on both euro dollar and cable, and still see that seasonal tendency unwind later on. And later on by meaning, a week or two. It could be a little bit late starting. So just prepare yourself, because that's what we're getting in the state of our mind of wanting to look for a trend change. We're still sticking with the narrative that the dollar is going higher and foreign currency should be going lower. But if we see signatures in price, and I'll point them to you as it happens, I'll say, look, this looks like it may be happening, so we have to be mindful of that. Then you guys can start studying appropriately. But that's going to be it for now. And I'll talk more about it, obviously, as we go along into this week. Just as a reminder, tomorrow is the 10th, so if you have not made your payment, you need to do so. Otherwise, on Monday, before I do anything with emails and such, I will be removing everyone that has not made their payment that is due for this next rollover into the March content, or your next month's delivery. All right, so let's roll over into British pound. So this is the seasonal tendency for British pound. You can see pretty much expecting the same thing. We're about here in the time frame, so we could see a little bit more movement down lower relative to the seasonal tendency, or it could happen a little bit later. Notice what happens when they do the compression on the data. Sometimes it starts here over a long patch of data compiled, but then we have a nice run higher, again seasonally speaking, for the British pound. It's also in agreement with a weaker dollar, seasonally speaking, and it's also in agreement with a stronger euro dollar, seasonally speaking. So just be prepared that we could see the likelihood of a intermediate term reversal of sorts for foreign currency going higher, especially if we hit the weekly inefficiency on the dollar. COT data, using our hedging model. Right now, you can see there's a lot of selling going on in British pound. This ideal scenario, we look for the same pattern, equal highs being rated and then going short. Or we target them for a low resistance liquidity run. Either way, it's an opportunity for you to trade. But if we see it on a daily chart, man, it really creates, as you can see here, really nice opportunities where it can create a nice range of pips. We have this low in here. Liquidity is resting below that, so they might be looking to seek it right below those lows. And then if we see that seasonal tendency, this is probably the scenario that may unfold with that idea. If not, we'll be targeting this area down here. Bullish order block. We have a gap in here. So around that 129.20 level, if we don't find a rejection below this low here, we'll be watching 129.20, 129.30, 129 big figure. It could be 129.50 mid figure as well. It depends on the time of day and how it trades at any one of these levels. So it's not like, well, you just gave me 4 different levels, Michael. Yeah, I gave you 4 different levels. They're institutional levels, but how we trade to those, what day of the week and what time of day, all of those are ingredients that we look for a high probability setup. GBP daily chart. We have this level in here. We have a small little gap here. This candle's high to this candle's low. Okay, if we trade down to that at the time of Brexit, that might be a key level to watch some kind of a reaction at. If we just dust it and go right on through it, we'll be targeting the sell side liquidity here. Okay, again, that's on Tuesday's Brexit tentative vote. Beautiful buy side liquidity, as we mentioned. Pop through it and then gave up the ghost. So the range low, the range high in here, this is also optimal trade entry. Will be at a discount, but it can get to a deeper discount by trading down into here. Okay, so just be mindful of that. I'd like to personally see it, if I'm going to be looking to go long, I'd like to see it trade down to the order block and close in this little gap in here. That to me would be a little bit more high probability, and it would also allow for a little bit more time to get down in there relative to the seasonal tendency and the economic calendar this week. On the hourly chart for GBP, Monday's high and low, we traded around the Monday's around the Monday's low on Tuesday. Nice little optimal trade entry in here. Failed to get down to it here. Came right back up. And this is one of those instances where if you're swing trading, this is why we don't rush to move our stop. Your stop would have been above this high anyway, and it came back up, swept the relative equal highs in here. We'll look at it on a 15-minute time frame. You'll see it. Cleared that, and then we had a nice sell-off. We worked Wednesday's low here, and you'll see that when we go into the 15-minute time frame. Filled in an imbalance, SIBI, sells off, comes right back up, bearish order block on Friday, and makes it a mad dash to get down into this gap here, and ultimately down into a bullish order block. If you look at price, okay, I mentioned how we were looking at a market maker buy model. Here's the original consolidation, retest, sells off, distribution, smart money reversal, low risk buy, reaccumulation to run above the consolidation here. Now look at what we have. Consolidation, accumulation, reaccumulation, smart money reversal, low risk sell, distribution, another level distribution. So we're looking to make a run below this low. That's where the sell side liquidity is. That's why it's being noted there and here. There is another pool of liquidity right in here. I did not mention that because I want to see the sensitivity here. If we trade below here, then obviously our eye needs to go down to this level here to close in that range and look for a bullish order block. All of those, in my opinion, if it goes this deep down here, it's just going to run the low. I don't think it's not going to find support at this low here. If it gets to this level, it's just too deep. So they'll just want to whip it down below there. So again, Brexit is the focus. It's the flavor of the week. So just be mindful that it could get pretty crazy again. From a 15-minute stance on GBP, we have Monday's high and low here. You can see that all the price action working off of Monday's high and low. I'm sorry, rather Monday's low. Optimal trade entry here. Look at the equal highs in here. Now, if you are selling short, okay, say you sold short here and you took some profits, but you had your stop up here on a swing trade or a one-shot, one-kill basis. That's why we take partials and we don't rush to move our stop loss. If this model in price, where it sends it up here and it creates these triple highs, quadruple highs, high, 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 and high, market trades down, yes. Are you going to feel comfortable moving your stop from here down to there? No. It's Candyland. So they take it up there, whip it through, shallow, then deeper in there, working that level, and then it breaks down. Then we have our bearish order block, trades back up into it here. We break down below Wednesday's low, whip right back up into it. That's what's happening. We're working the levels, daily highs and lows. They don't act like support and resistance like you are trained in the books. You wait for the order blocks to form relative to your bias. So we want to see price trade back above Wednesday's low. It does. What's it reach for? Bearish order block, inefficiency, a SIBI. It's balanced, sell short there, breaks down. Here is Thursday's low, right in here. Thursday's low, we create that, come right back up into this area right in here. This is a breaker. We have a high, a run higher. So if we trade back up into this level, which happens to be Tuesday's low as well, previous day's highs, doesn't mean yesterday's high. It means a previous day's high. Always look for the last 3 days. Look back for working off of the daily ranges on daily highs and lows. You'll have a plethora of setups regardless of what you trade. I don't care if it's a cryptocurrency. I don't care if it's a bond, if it's a stock. You will find setups. Okay, if you got the bias right, this is what you do for refining entries. Price trades up into the breaker here, and then sells off. Bearish order block, runs into it here, here, and sells off. Beautiful, beautiful price action on GBP on Friday. Wicked price action, really. So, we see a lot of the signatures I teach. If you're new from the free tutorials, you can see a lot of things in here too. But from the mentorship aspect, there's a lot of things in this previous week's data that I left for you to have in your own chart study. I will look at the dollar CAD because that's missing in this one because I want to make sure that we are staying on focus with our two pairs under study with the mentorship, that being the Eurodollar and the GBP with the dollar index. But I'll resume my commentary on Monday evening with the loonie, dollar CAD. It'll be in the chart form. I'm not going to do a video Monday night, but I'll post on the forum probably around 7:30, 8 o'clock on Monday relative to dollar CAD. And that, my friends, is going to be it for now. We're going to be looking ahead again. As a reminder, this is what we have in terms of teachings still for this month. And then what we get in addition to model number 2 for charter members. So with that, have yourself a pleasant weekend. I'll catch up with you guys on Monday.